Hi all, welcome to another video. Hope all of you are doing great. So we are almost towards the end of this year. So today I am shooting on 18th of December 2025 and I thought I will do a quick rewind of this year, what happened in terms of stock market, Indian stock market, and some related things around our market. So yeah, let's directly start from the beginning. I would say uh, the first thing that happened this year was the budget and the decisions taken on this year's budget, right? So last year the election happened and this year's February 1st budget was the full year budget for the third Modi government, right? So the one important aspect of this year's budget is that finance minister has increased the tax slabs to 12 lakh rupees. So that's like a big push towards consumption, and the some changes around that updated tax slab is that you cannot have many of the exemptions that we used to get in the previous year's income tax structures, right? So February, that was the first thing that actually impacted the market. Not necessarily impacted, but that was a decision that could potentially impact the market. And in the February itself, RBI started decreasing or cutting the interest rates, right? The repo rate. It started with 25 basis points in February. Then again in April also they cut another 25 basis points. June they cut actually 50 basis points, and in December recently they cut another 25 basis points. So on a total, RBI has cut 125 basis points of interest rates, which is 1.25 percentage, right? So why this is extremely important? Now the loans will be much more cheaper. If you are having a home loan which is flexible in nature, you will be knowing that the rates might have reduced by 1.25 percentage. It will significantly reduce either the tenure or the monthly EMI amount. This is not only helpful for the individuals, it are also uh, helpful for the businesses, right, that are taking loans for business expansions. That means the companies will have good, they will get good rates for taking business loans, and that can actually push the capex. Capex is nothing but the capital expenditure that's needed for growth, right, for all the companies. So that was the second point, right? And the third point is September the government cut the GST rates, right? Again, that is extremely beneficial for people like us, the common people, because that the percentage of GST rates has been reduced. Many products it has been reduced from 18% to 5%. So yeah, that is the third thing that happened this year. All these are, I would say, good things. And the fourth point is that our inflation rate has reduced. If you see the last few months, inflation, it is less than 1% or in 1% range. And if you take the entire year's average, it will be hovering around 2 to 3%. So we are in that zone of 2% of inflation, which is again a good thing. But there is a flip side. US government, right, the Trump administration has actually put 50% of tariff on Indian goods when we export to US, which is not at all a good thing for Indian export companies. Especially it's affecting the jewelry business, textile business, pharma business, right? So that's heavily impacted those industries and the companies doing business around those products, right? So that happened, I think, the mid of this year. And if you see the another point, that if you see Indian rupee is falling heavily against US dollar. So I think this year only it fell more than 4 or 5%, and right now it touched 91 per dollar, right? So Indian rupee is weakening like anything. That is not at all a good thing, especially for a country like India where we are heavily import driven, right? And another point is that our stock market. Now let's focus on the stock market things. The earnings of Indian companies grew only in single digits. Not even it didn't touch double digits, I would say. But the valuation of, if you see the Nifty 50 stocks, it is around 22 times or 23 times, right? So if the growth is only in single digits and the valuation or the PE ratio is around 20 to 23, that means the market is actually overvalued. This is not at all a good thing for foreign investors. That's the reason you can see the data. FII had sold Indian market heavily, like more than 1 lakh crore rupees of money has been withdrawn from the Indian markets, primarily due to the fact that our markets are valued highly and our rupee is depreciating. So both things, if you club together, the dollar adjusted return, expected dollar adjusted return for FIAs are very, very minimal, right? So what they will do, they will eventually try to find better markets for investments. For them, India is an expensive market, right? So FIA sold heavily, and luckily for us, the DIAs, our domestic institutional investors, were able to, you know, take in all those pressures, and just because of that, our market didn't fall that much. So if you take the Nifty YTD returns from Jan till now, it's approximately 9%, plus 9% of returns from Nifty 50, Nifty index. So we continue to be in that overvalued territory unless our companies, publish better result, double-digit returns. It's very hard for us, to make good returns from stock market, especially if you are planning to go for lump sum investment in indexes. Individual stock selection is still possible. There are a lot of good companies, undervalued companies, but that takes time, right? That you need to, for that you need to do a lot of research and understand why those stocks are valued less compared to other stocks. So stock India is still a good place for stock pickers, but you need to be extremely careful and you need to do a due diligence and thorough analysis before investing. So I would say this market is best for systematic investment plan. SIPs, if you are doing for long term, that is still fine because you can get that average dollar cost averaging, and you will be getting the units every month, whether it is up or down, right? So you, over a period of time, it will anyway average out. Yeah, Nifty 9%, but the main issue of this market was, though we are nearing the all-time high or we are still hovering around the all-time high, it doesn't feel like we are in that all-time high, right? Our portfolios stocks are beaten heavily. If you see, mid caps, small caps and micro caps were sold off massively, massive sell-off in all these stocks, mid, small and micro caps, primarily because of the fact that those stocks are already overvalued. Secondly, some of the stocks didn't give good results, especially the small and micro caps. Their performance were not so great in this year. Some companies did well, but most of them didn't do well. And largely, if you see, all these stocks has been sold off massively. So due to this, our portfolios are still in red. Most of our portfolios are in red, I am assuming wherever I see, people are saying we don't feel like it's an all-time high, right? Because our portfolios are bleeding. We are anxiously waiting to see what's going to come in these stocks. But I would say it's very uncertain. That space is still very uncertain because uh, most of the stocks are still in that overvalued territory, and unless and until they publish some good result, it's hard to uh, hard for a comeback in those stocks, especially when the FIs are selling heavily in our market. So it's a wait and watch game for individual investors like us in the Indian market. I don't know how long it will be there. So let's see. So another point is around gold rates, right? So I think gold has rallied around 40-50% this year. Silver had reached the all-time high of $15, and I think right now I'm not remembering exactly. I think it crossed 60 or something. So though silver broke, I think it's a multi-decadal resistance, and we don't know how far it will run. Commodity had a good run this year, especially both gold and silver. Crypto, Bitcoin, Ethereum were volatile. Uh, I would say not so great. Of course, it depends on on what price you enter. So crypto was actually volatile. So yeah, that's the broader picture of 2025. And uh, if you ask me, uh, if I have to summarize, this year was kind of a turbulent year for Indian markets and individual investors, individual long-term value investors like us. So it was very turbulent. Though Nifty gave 9% return this year, uh, most of our portfolios are still in red. I am assuming, right? Now, if I were to talk about my portfolio, so I'm not naming individual stocks, but I can largely say that I started adding some good blue chip companies, big companies in the second half of the year. First half of the year, I was carrying two micro cap stocks, and one stock was, fell around 70%. That was a massive sell off, especially because of the poor performance from the company's side. But luckily for me, the other stock actually doubled. So I started investing. I invested in these two stocks last year, and the other one doubled. And because of that, overall, I would say uh, it didn't hurt me that much. Though the 70% of erosion happened in the other stock, right? But yeah, recently again, if you see from last month onwards, micro caps were beaten heavily, and the stock that gave me, 100% return again, that came from the top, and it corrected around 20-25 percentage. And the other one, the stock that that had fallen 70 percentage, that came back a little bit. Right now, it is still in minus 60 percentage red. But if you combine all the average, my overall portfolio didn't do much this year. I would say I have uh, either 0% or minus 5% of return. It at one time my portfolio was around minus 15% of loss, but it's recovered, and now right now it is in 0 to 5%, hovering around in that range. So that's the issue with most of our portfolios, because most of the stocks were sold off, massive FIA selling, uh, poor performance from companies, so and very good returns from commodities like gold and silver. People are rotating their capital, right? Pulling out the money from stock market and investing in other asset classes. So overall, that's what 2025 is all about. Not a great year. Personally, for me, uh, I think for most of us, it's not so great in terms of investment returns. Uh, Even otherwise, right? That 50% tariff was not something that we are anticipating or expected. The important learnings from this year is that first, valuation is the most important aspect if you are doing direct stock investing. That's something that I learned. I was aware of that, but this year actually taught me the lesson of valuation. If the stock is how much ever growth it can give, if the stock is trading beyond a certain PE, it's not worth investing in that stock. And always go for margin of safety. The concept of long-term value investing is primarily revolving around margin of safety. If you are getting a stock with cheap valuation, though it's hard in Indian markets, we have to wait for that. And we have to wait for that opportunity. And once it arrives, jump into it, put your money. That's something I learned this year. And second point is the importance or the value of SIPs, especially in a sideways market like this. The beauty of, I actually understood the beauty of SIP in this year, this 12 months, because my portfolio, my mutual fund portfolio was stable. It was accumulating units, and whenever the market slightly goes up, it's actually reflecting in the mutual fund portfolio. There is not so much of volatility, and I am an index investor, so very less volatility, and that stability in the mutual fund portfolio gives immense confidence and gives that extra margin of safety to do some sort of direct stock investing. And the third point is, this year commodity had rallied a lot, like I said, gold and silver, but choosing right kind of asset classes is extremely important. One asset class is rising so much, that doesn't mean that you have to put your money onto it. You have to be thorough with one asset class and stick to that whatever happens, because that's where your circle of competence lies. So it's always important for you to thoroughly understand at least one asset class and stick to that, and you should avoid any other noise. You should never compare your returns with others, because that will give you fear of missing out. So yeah, there are many lessons because of the turbulence and sideways movement and volatility in the Indian market. But it's good to have those knowledge so that we will come up with better investment ideas, and we will have more opportunities to invest in when we look into year 2026. So looking forward to 2026, hope 2026 will come with good opportunity, and hope our companies will perform better in 2026. Hope our GST rate cuts, interest rate cuts, low inflation, all the positives of this year will actually visible in next year. Let's wait and see. So yeah, that's about today's video. If you are liking my content, do subscribe and share with people who like finance and stock market related content. I will come up with another video shortly, soon. Till then, take care. Bye bye.